Welcome back. Now, Real Estate 101 highlights the 4 key factors driving the markets as demographics, interest rates, the economy and government policies. With these at play, business parks and storage warehouse owner Sirius Real Estate recently reported a strong set of interim numbers. The group is currently on an acquisition spree in the UK and Germany, where opportunities are set to be attractive. Company CEO Andrew Coombs joins us with more insights into navigating the real estate industry in those territories during this climate. Andrew, it's always a pleasure. Good afternoon to you.
Likewise, and thank you for having me on today.
Wonderful. Thank you. Welcome to sunny South Africa. I can imagine. It's good to be here. Let's talk, Andrew, about the last set of numbers. They were really strong showing. We are seeing market volatility. It's not, quite easy to release a set of numbers like this in this macroeconomic environment.
No, it isn't. And these are our numbers to the half year, to September of this year. I'm really pleased to tell everybody that we've managed to achieve a 9% increase in our generation of funds from operations. That's a really important number because we pay 65% of that out as dividend, and we're announcing a dividend today that is the 20th consecutive increasing dividend since we listed on the Johannesburg Stock Exchange in December 2014, and that dividend is 11% more than same period last year. So the company is growing its earnings and we're growing our distribution back to our shareholders.
Let's talk about, these economic conditions, specifically casting our eyes to Germany and the UK. What are the macros like there, and how are they driving Sirius and how the business operates?
So the most notable macro is that inflation is now coming off quite quickly, particularly in Germany. What that's leading to is speculation that interest rates may have peaked, and where Europe's concerned that the ECB may consider lowering interest rates at some point in March or April of next year. So it kind of feels like things have peaked, and it feels like some point in 24, looking forward, the market's going to change direction. But of course, only time will tell. Mm-hmm.
And I'm keen to also get your insights on valuations, property prices. How have they been impacted by not only what we're seeing with interest rates and inflation, Andrew, but in my mind, the risk profile of, and I say the planet, has changed quite a bit. Has that at all affected property prices?
Well, look, obviously interest rates have, but really what's kicking in now is the bankers. And, what's happening at this point in Europe and the UK in particular is bankers are thinking about, what risk looks like next year, and they're thinking about how they allocate their capital. And that's not just about the assets, that's also about the people and the platforms behind the assets. At Sirius, we're very fortunate because we have no major debt refinancings until 2026. We have all of our interest fixed at 2.1%. But if we look at some of the people we're buying property off, what we're learning from them is, their bankers are in some cases saying to them, look, we're really sorry, but it's not about the interest rate. It's about the concept of lending to you in the future. We're not able to do that. And some of those people are having to look to non-traditional, much higher cost of debt options. And of course, what that's doing is that's driving them to sell their property. Now, that's not across the whole market, that's not all owners, but what we are saying is there is a small section of opportunity for companies with Sirius who have a strong balance sheet, are well capitalised, most importantly have a really good platform behind them to be able to run assets. There's opportunity for companies like that to be able to take advantage of the early signs of distress in terms of some property prices.
It's very interesting because also what we are seeing at Sirius is some disposals and some acquisitions, Andrew. Exactly what is driving, these decisions? When do you arrive at the point where you're like, okay, well, we might purchase one here, but this one is definitely has to go off the book? What is informing these decisions?
Well, you're absolutely right. What we've done is we've disposed of, in the last 12 months, just under 100 million euros of property. We've done that at a premium to book value, about a 14% premium to book value. And what we bought is 30% higher income. But most importantly, what we've done is we've bought 30% more vacancy than we had before. So we've taken the 14% premium, turned it into a 30% uplift in rental, but left ourselves with another 30% of opportunity to asset manage over the next 2 to 3 years. And really it's all about how hard the capital works and the opportunity in the property going forward. When we feel we've exhausted the energy in terms of the capital inside the property, that's when we want to recycle and turn that into a premium plus extra rent plus extra opportunity going forward.
Let's talk about the kinds of tenants also that you're currently sitting with, and maybe even trying to bring on both in Germany and the UK. In my mind, the UK economy battling a little bit more than what we might see in Germany.
Do you know, this kind of changes all the time. A year ago, I would have said yes. Now I would say, it's shifting a little bit, and probably in 6 months' time, the answer will be different again. But I mean, what is common against both is we have a mixture of very large tenants. So in Germany, 40% of our revenues comes from our top 50 tenants. Top 50 tenants in a group universe of over 10,000. So 50 out of 10,000 equals 40% of your revenue. And they're companies like GKN that, in our factories bake carbon fibre. We have other very well coveted blue chip names. And we have that in the UK as well. What we have in both countries is we have a very strong tenant base from, in Germany, what they call the Mittelstand, what we call in the UK as SMEs, small and medium-sized enterprises. And that really is the battleground of business as far as I'm concerned. You go and sign a lease with a large company for 10 years, you have to manage that, but a lot of the work's done. You deal with an SME, and every year you're having to deal with that SME. And there are real opportunities in terms of those successful SMEs, but also you have to mitigate the risk with the less successful SMEs. So what's common is those small and medium-sized enterprises, and they are the lifeblood of both economies.
Well, it's actually very encouraging to hear that somewhere around the world this is a booming sector. I must ask you, Andrew, about possibly looking outside of Germany and the UK for assets. Is that on the cards for Sirius?
No, not at the moment. I mean, we might be a bit cheeky and sneak into Austria or, pop across the border in, southwestern Germany and do something on the, French-German border, but not really. I mean, UK and Germany is what we do. The time now is really, really important in terms of sticking to what you're good at. It is not the time now to try and do something exotically different. Just stick to what you're really good at, deliver on it, continue to grow, and you'll be able to reward your shareholders.
I'm also keen to find out about Sirius buildings and possibly going green. That's a big theme right now across real estate. How is that faring for you right now?
So there are two different approaches. In the UK, it's about energy proficiency certificates. And there are two deadlines. One's 27, the other one's 2030. And we are going very well in the UK. We have a plan to make sure everything is on schedule within those timescales. And we're very confident of being able to deliver that. That will involve the disposal of probably 7 or 8 buildings that are less than £2 million. And that kind of thing is business as usual for us, but suffice it to say we're not going to invest in everything to bring it up to standard. Germany's a very, very different approach. Germany is all about carbon emissions and taxes on a pathway to 2045. So effectively what you need to do is stay on what we call the right side of the line to avoid an increased tax burden. And I'm delighted to say that we're doing that. We've got a plan to do that. And that plan will involve in the future getting more and more heavily involved in solar panels on the roofs of our buildings to make sure that not all, but some of our tenants are powered by electricity that's actually created within the Sirius portfolio.
And before I let you go, Andrew, keen to also just touch then on the outlook. We have spoken about interest rates possibly coming off in 2024. Any other risks that you might be seeing as you scan your environment that are worthy of noting?
I think the risks in today's world are more geopolitical than they are economic. You've got a government that's just about to change in Holland. You've got an interesting situation in Germany. You've got the US elections, the UK elections. You can see more political change in the next 12 to 18 months than we've seen for a while. And, you know, it's important to be able to understand and navigate what that might lead to. And at Sirius, you know, we are very much on top of that. You know, we locked in our gas prices when we anticipated Merkel stepping down and potentially the tension that that might cause over the Gazprom Nord Stream pipelines. So, you know, we always have an eye on that, and we're absolutely confident that we can continue to deliver on our business model with one eye on the economics and the other eye on understanding locally what's going on in the ground.
Well, Andrew, it's always a pleasure catching up with you. Thank you so much for joining us in studio, as you often do. That was Andrew Coombs, he's CEO at Sirius Real Estate.